Um, when the report came out, you can see right before the report how the volume just diminished at the ATR over here. And that was something that I was actually watching. And it kind of indicated that gold was probably more likely than not going to go up. Um, you do see that you have an ATR over here in the 180. Okay. The thing of it is it's approaching that ATR, the buyers are increasing. Now, that could change. I mean, this could reach up and hit the ATR and give you diverging volume. But as it stands right now at 826, it's approaching it on an increase in volume. Okay, so that tells me more likely than not, this may actually go up and try to test the 1276.2 area. Okay, you also see, that you've got nice healthy volume over here on the 12 minute. So we may get divergence on this bar. It's just too early to say because that bar just started building. Does everybody understand that? And I know I started a little bit early this morning. We're not going to have a long session this morning. That's the reason I didn't send out a reminder. Um, in fact, we'll be done by 9:30. I guarantee it. Any questions on gold? Well, it's always a great morning if you're still breathing, Keith. I wouldn't have hesitated about taking a trade at the ATR on the 3 minute, Christian, because you still had about 70 or 80 ticks before you even get to the ATR. And again, I think you were better off probably doing a binary on that. The only problem with trying to do a binary on gold is on this one, you would have to go out on a 2 hour binary. Um, and gold closes early. So I don't like the gold binaries as well. I like to have more flexibility than, okay, it ends at 1:30. How do I turn on the little countdown timer? Um, if you right click on your chart, George, and I believe it's format window and appearance. I gotta find this one. It's time scale. There it is. Nope, it's not. Okay, it's under indicators then. Format indicators. This is something you set like one time and then you don't set it ever again. Wrong thing. And go to trend, format, style. I know it when I see it. So no. Hold on, George. Let me find it. There it is. It was in the format window. It's down here where it says marker style, precise marker countdown. And if you click OK, that actually puts the countdown over here. And for some reason, I'm just not getting it this morning. Yeah, it gives you 5 hours to trade gold, but I just don't like it, Christian. I don't like having 5 hours because what if you get into the market, okay? Because time is a component of binary options. So let's say that you get into the trade and it takes 6 hours for it to go to the out of the money option. Well, guess what? It closed at 1:30 and it took until 2:30. Do you understand, Christian? It's a very big issue because when you're trading binaries, respecting the time decay, and that's what it is time decay, is part of the deal. Okay, so if it just kind of flounders until 1:30, and that happened on Monday, that was a good scenario if you went out on a daily option and I kind of knew we were going to have this $10 move, but most of the movement actually came after the close of the binary. And that's when the pit closes is at 1:30, and theirs is based on the pit session. And time is a factor when you're trading binary options. Okay. So, I mean, overall, I do think that gold is going to go up. I would analyze the volume as it approaches this ATR. As it stands now, the volume has been increasing on that approach, which means they may flip it. It does not mean it will not bounce. Okay. So keep that in mind. Now let's go look at crude this morning. And again, we're having a short trading session today. We're only doing a 1 hour session. So, okay, here's crude. You did make a magenta peak on crude. It has retraced back to the ATR. Okay, I see a sweet spot in the trading here. Do y'all see that? Or am I the only one that sees it? And this is what I call the sweet spot. Okay. Why is that a sweet spot? Because there is nothing in the way. Okay. And do this here. Between here and here, as it stands right now, there's nothing in the way right here. Okay, do y'all see that? That's a sweet spot. Now, if you look up to here, okay, you do see that there is an ATR around 50 bucks, okay? So that puts it about here, okay? Just something for you to be aware of because it may bounce on this ATR, okay? So if I was in this trade and it approached this and I started seeing volume in there, then, I would say, okay, time to get out of this. Consider a Buddha on the 3 minute that has already played out. This was the magenta peak on the 3 minute. It's already retraced back to the ATR, and now it's coming down. So there is no Buddha there. Okay. Yeah, it would be a trend trade, and I would say to the downside, just be aware that when it gets to the $50 area, which is about $1.30 away, you could see a bounce. Are the blue lines on the chart, on the 45-minute chart, congestion dots? Yes, they are. You know, if you wanted a Buddha trade, okay, the Buddha trade, give me just a minute here, and I'll show you where a Buddha entry came in. This was telling you that it was going up, correct? So it comes back to the ATR, forms congestion dots, and then right in here, anywhere where it's touching this line would have given you a Buddha trade back to the ATR. Then you formed a double top. It did it on a diverging volume scenario, telling you, hey, it's coming back down. That also occurred, guys, with this congestion area on the 12-minute chart. And what do you have as it approached the congestion area? Voila, diverging buy-in volume. Does everybody see that? So depending on how well you read your charts, you had a trade up, and then actually you could have had a trade right back down. Yeah, you'll get a magenta peak. It'll retrace back. But remember, crude moves pretty fast. You got to be on your game to get in that one. All right, let's go look at the Nasdaq this morning. There we go. Well, we do have a 10:15. No, I'm sorry, a 10 o'clock market report. The ISM non-manufacturing PMI. Okay, you see that you are at the congestion dots over here, and it's done it on the verging volume. You know, I think that should probably stand out at you. There's your diverging volume. You're at a congestion dot. Now, this looks like it's a sweet spot between here and here, correct? But it's not. You got something right in the way. And this is the area. Normally, remember, it comes back to the congestion dot, goes back and tests the ATR. Now, it's done that, and it's done it on an increase in volume. Okay? So now you have come back to this lower level, and it's been on a decrease in volume. Okay? Do you see the conflict in there? Okay? Now here you had an entry if you were up early enough where you had diverging volume and you could have taken that little up leg. Okay? Would I be interested in entering this right now? No, I would not. Everybody understand that? It has managed, when you look at this 180-minute chart, here's your congestion line, and it has sort of managed to break that, but look at the volume that it did that on. Okay? That's why you're seeing this, what I would call confusion right now on the NASDAQ. Yeah, I'm very neutral on this right now. I would be more inclined to just wait and see what happens. Okay? Um, in order to go up, you're going to have to break the ATR here, and you're going to have to break the ATR here. And you're going to have to break an ATR here. Okay? And I think I would probably wait and let these chart clear up because it's not really giving a clear picture right now. Let's go look at the Dow and see if the Dow does anything differently. All right. Now, on the Dow, you are slightly different, okay? You still have the ATR up here, which is coinciding with congestion lines, okay? You also see that you've got double congestion lines here, okay? My anticipation at this time would be that it's going to come back and at least test this ATR again. Now, that ATR level is at 598, which really is coinciding with congestion dots over here on the 12 minute. Okay. So, I would be looking to see what happens as it comes back to these areas. Okay, you've got this area here, you've got this area here. I don't think there's a clear decision there whether it's going to go up or down. Now, this is one of the mistakes that most new volume traders make. You see that divergence there, right? Oh, yeah, I've got divergence. This market is going up. Okay? There's an issue there, and your issue is that it did not take out that low. Okay? So you should not be looking at this as divergence. It did exactly what it should have done in that it made a higher low, and it made a higher low in the directional volume indicator. Do y'all see that? So do not read that as divergence. It's not divergence. Yeah. You're getting the magenta peak right now on that, which is telling you that it's going to go down about 120 ticks, 127. The key to that, Dave, and I'm going to tell you right now, is whether this holds it down or not. And that can also be seen here. Okay? And if this area, if both of these areas are able to hold it down, then yeah, you might get that 126 tick movement to the downside. I'm glad you picked up on that. I didn't. As I said, my brain is not on full volume this week. So, yeah. And, this area is actually coincides with this area. And if they approach this again on the verging volume, it's probably going to go down. Any questions on the Dow? Now, you don't have that scenario on the NASDAQ. It is on the Dow. Yeah, just read the volume as it approaches it's the congestion dots right now on the 12-minute, Dave. It would be the ATR over here on the 45-minute. They're about 8 points from within each other. All right, let's get all of that stuff off. And let's go look at the S&P 500. Okay. Now, you have had a magenta peak already on the S&P 500, and the issue there is it's really not a lot of ticks back to the ATR. Y'all see that? That's why I don't like the S&P 500 very much, because you don't get substantial moves on the S&P when you compare to the Dow or to the DAX. Okay, it trades more. Well, the Nasdaq actually does more ticks per day than the S&P, but it has a lower tick value. For new traders, that is a good thing. Okay, because you can't get in as much trouble. A point on the Nasdaq is $20. A point on the S&P 500 is 50. Okay, so there's quite a bit of difference there. If I were a new trader, I would definitely start out with the Nasdaq just because it's a lower tick value. You could also do that on the Dow. The difference is the Dow is more volatile than the Nasdaq. Okay, so let's look at the S&P 500. Same, almost identical setup, just a lower tick value. Okay, you see here's your ATR here. Here's the ATR here that coincides with it. Okay, they've already retraced once here. Okay, and they pretty much put everything they had into it and did not get anywhere. Okay, now you also see over on the 3-minute, you had a line of congestion dots. Initially, they did break through it, but right up at the top, again, you had that diverging volume, okay? You also had the diverging volume here, okay? That coincided with it being at the ATR up here. Now, if you were really good at reading your charts, you probably could have entered right there, okay? I would, at this point, wait until the market opens, let it retrace back to the ATR on the 180-minute chart because it's only 45 ticks, okay? I would let that occur before I would go into that market because more likely than not, if it approaches this ATR right there, if it approaches it on the verging volume, okay, then you're going to have another up move. Do y'all understand that? Now, you might say, but there's a beautiful sweet spot right here. And it is, okay? It's not one that I would want to trade on the S&P 500. That's 10 points. That's 40 ticks, okay? If you're getting into this trade, okay, you may be able to take 20 ticks right off the bat, okay? That's what a scalper would do. And I don't know everybody's level in this room, so I don't recommend that type of trading. Do y'all understand that? Now, to do that, you would only be risking 10 ticks. You would take profits at 20 ticks, okay? But remember this, and this is what a lot of people fail to remember. As the market opens, this ATR could pull up towards this price. Now, it's not going to pull up that fast because it's a 180-minute chart, okay? It pulls up faster on a 3-minute, okay? That's the fastest it's going to pull up. On the 12-minute, it pulls up fast, but not as fast as a 3-minute. The 12-minute is faster than the 45-minute. Do y'all get my drift there? So this may pull up, but it's not going to pull up very much between now and the time it moves 20 ticks. Y'all got that? But again, when I look at these values, I know, okay, this is possibly a 10-point move. I'm not interested in it because that only equals 40 ticks. It's much easier to take profits when you have, 60, 70, 80, 100 ticks in the sweet spot, okay? And when you look at this and then go back and look at the sweet spot on crude, the sweet spot is about $1.50. That's 150 ticks, okay? To get Clipper 1, you need 20, 40, 60, okay? That's the way it works. So the maximum is you need 60 ticks. Well, that's half the value of what crude could potentially move today. Now, I calculate that automatically because I've been doing it for a while, although I'm slow today. Okay? But that's the way that I look at, okay, is this a trade I would want to focus on? The answer would be no. Plus, I don't like the S&P that much anyway. I think it's one of the worst markets for people that are new to trading. Now, this is a market that actually moves more than any one market should ever move. Okay? I love trading the DAX. Okay? But it's a market that I honestly believe new traders should not trade. And if you want to know why, it's very simple. It will absolutely devastate you if you don't know what you're doing. Okay? I have friends of mine that are great traders that won't touch the DAX. Okay? And the reason is it is very volatile. One bar on the DAX could result in $1,000 or $2,000 loss. Okay? That's why. That's what that means. All right. Now, what do we see on the DAX? Okay. Your first clue is over on the scanner window. You've got red, blue, red, red, blue, blue. Okay. That's telling you, hey, it might be a little bit hard to trade the DAX today. All right. Now, you see that you've got this almost double zone here. This is from a prior congestion dot. It's coming back now. The first time that it came back, it had diverging volume. Then it tried to go up and it had diverging buying volume. Okay? You're at an ATR over here on the 180. Okay? All right. As this has come back to this ATR, right now it has increasing volume. Okay? That tells me that it may break this ATR. Everybody with me so far? And what do we have over on the 12-minute that's holding it down? ATR. Okay? Right now it's just been kind of floundering right here, not really gaining momentum in either direction. You've had volume divergence here. Absolutely no selling volume or buying volume in here whatsoever. Okay? The bias, in my opinion, would be to the downside. Okay? It's going to have to break this ATR. And when it breaks it, usually it's going to be very violent, especially with that kind of volume. Okay? You also see that the congestion dot here, as it came back to this congestion area, again, it's on diverging volume, selling volume increasing to the downside. Does everybody understand that? Yeah, it does actually agree with the bias of the Dow and the S&P, Christian. To me, a better entry would have been back here because that was a very, very low risk point of entry on the 12-minute chart. And let me tell you, you want to make sure that you're right at the ATR on the DAX. You can also see as it was retracing here. Okay, do you see how the buyers decreased? But I doubt very seriously anyone was trading the DAX at about midnight last night that's in this room anyway. Now, this is, I would keep an eye on this one today because, I've seen this happen a lot where it will come down, it will test that ATR, it will give you another red volume bar. And when it does, that gives you a divergence and boom, up she goes. And it will be quick and it will be painful if you're in the wrong direction. Okay. That's the best way for me to put it. But Right now, the bias is to the downside. Yeah, it'll be nasty. That's a good word. It will be nasty. And in the middle of that, we do have that 10 o'clock market report this morning. So that's going to make it even nastier. Any questions on the DAX this morning? What are the two or three FX contracts you consider to be most tradable? On spot or currency futures, George? On the future side, I would say the euro, the Aussie does really well, and the British pound. And it kind of also depends, George, on which market reports are coming out. Because, like right now, the Aussie's real active because we've had a lot of Aussie reports. Um, Last week it was the Canadian. You know, give me a moment and let me see if I can open up my chart on the futures. I think it's this one. For those of you that are in the room, there's an email that I'm sending out later today because one of my affiliates is going to be trading live during the London session tomorrow morning. Tomorrow's Thursday, right? Yeah. He's doing a 2:30 a.m. Session, and he's quite good. He made 1,200 pips in January. Me and him worked together, and I give you the link within the email. But he does a lot of spot forex. He's very good. You may want to join that session if you're a spot forex trader. Let's see. Let me put this where it goes. And that was the wrong thing to do. Okay, I've lost my scanner. My watch list. Put it back where it goes. All right, we're getting there. Ah, dadgummit. Okay, it's playing with me this morning again. All right, so on the Aussie, let me put that down a minute. It's just not going to let me do it. Haha, we did it anyway. All right, so on the Japanese yen right now, that's the one I'm on. We're going to look at it. Do you see how they came in and took control of that market right now, George? And you've got a sweet spot between here and here. Now, we could just arbitrarily go long on the Japanese yen. Okay. I would wait and let this flip that ATR. Okay. And then at least you have enough room between here and here to potentially take a profit. Okay. Now, the one thing on the Japanese yen, it's been picking up some volatility. Okay. But this is where you really have to watch for gaps. Okay. George, do you remember me saying if you see a gappy chart go up in time? This is really where it plays into it because typically on the Japanese yen, I would be using this time frame and it would change to 1245 and 180 because of gaps. Okay? And I mean, you can even see it in this one. You can tell just from the price bars themselves, you're starting to get a little bit of volatility in here, but you had gaps all the way back here. Okay. That is the one thing you need to watch when you're trading the currency futures. Another one to watch out for is the Swiss franc. Now, they increase the margins on the Swiss franc, so there's a lot of people that will not touch that market right now. Um, I'm waiting for it to kind of settle down a little, and then I'll go back to trading it. But it's a great scenario of do you see how gappy that is? That tells me I'm on the wrong time frame. This would be my lowest time frame. Okay? And it goes from a 12 to a 45 to a 180. Okay? I can get some great trades on the Swiss franc. Okay? But I've got to do it on the right time frames. Okay? And this is just an example where you've had volume divergence here and you're anticipating it to go back to here. So then it becomes, okay, how much is it between here and here? Okay, well, it's 20 ticks. All right. The Canadian recently, because they had a rate announcement, I believe it was last week, they have kind of picked up in the volatility as well. All right. Now, if you see there was a sweet spot between here and here and it missed it maybe by 20 ticks, okay? And then what does it do? It comes right back down to this line. So you had up and then you had pretty much a down effect, okay? You also see over here, see how that ATR held? Now the next question is, do you have a gappy chart over here? Okay? You know, through here it looked like it wasn't, but I already see that you're getting gaps over here. Okay? So again, my basic time frame 12, 45, 180. Do I still pay attention to, do I have a potential magenta peak on 720 or 1440? I pay attention to that always because that's what gives you the big moves to the downside. And if you watch the 720, the 1440, do you see how these are dark? I know for a fact that you have magenta peaks on those time frames. Okay. If you're looking at, okay, we had magenta peaks on the 720, what was your signal to go long? That's where it pulled back to the ATR, did it on diverging volume. The delta was controlled by the buyers. That was your entry to the upside. Okay. Now remember, these will give you some major moves. Okay. This went from 79.40 up to 80.99 or 80.90. Okay, that's a major move right there. Okay, that is the result of a magenta peak on a higher time frame. Okay, those are the ones that I like. Just remember that if you're having to keep it overnight, you have the additional margin requirement on the future side. Okay, the British pound one, it moves a lot. Okay, the British pound on the currency future side moves more than any other currency. Okay. Um, and you can see the difference. Look at the difference on the 3 minute over here versus the other ones that we have looked at. You're not seeing as many gaps on this one. Okay. You had this nice strong move to the upside, comes back, test the ATR. Do you see how you've had diverging volume on that? Okay, so what happens? It goes back up. Okay, right now you're at an ATR. Again, you're on diverging volume as that approached the ATR. Okay, I'm laughing because my mouse is having trouble working with me this morning. Do you see how you had the magenta peak retrace back to the ATR? No, I still got to go to Office Depot and get a new one. My son worked on it yesterday trying to fix the mouse buttons, but he didn't do a good job. He told me you did, and it's a little bit better. Okay, now the euro used to be my favorite because it moved so great. On the Aussie dollar, it had a magenta peak. I traded that on the Forex side. Um, yep, sure did. You're right. This is where you're talking about, Dave? Or was it before that? Because that was last night. Hold on. I know what you're talking about because it made a wide bar up. This is what you're talking about, correct? Yeah. This was your first one. And yeah, it was about 724 was the first entry. Do you see how the delta was completely controlled by the buyers? But if you missed that one, they came back and gave you another entry in here. So, and this is, and this is the pattern that I really do wish y'all would identify more often, okay? Because I say it a lot, but this is actually a great example, so I'm glad you pointed it out, Dave. This had a huge move to the downside, okay? And you can see that as it moved to the downside, do you see all these lows and do you see how you had this diverging volume on all of those? So then it goes to blue and then it comes back to test again here. Now this is actually a Wyckoff pattern that Wyckoff would trade all the time. Okay, so it goes down violently, flips, comes back to test the ATR, okay, and then changes to red, then it changes back to blue. And what do I tell you when that happens? Wait for it to form support for price to go up. Wait for it to form support for it to go up. Okay? So you had two really nice entries into the uptrend, okay, with volume divergence that led you into that move. And I mean, it did nothing but move up, okay? And with this being on a 12-minute chart, it's really a better trade. You're talking about 76.50 up to almost 78.50. That's one heck of a move. But the issue is right here. This is where y'all get stuffed out, okay? Because it goes blue, red, back to blue, okay? So by the time this entry comes, oh, I don't trust that because I got stopped out over here. Look at what you missed. Yeah, it's like the old roller shades in the 60s and 70s. You pull it down and jerk it down twice and it flies up to open. It's exactly what happens. You see it both on, you know, the up movements and the down movements. Okay? I love it when I see this pattern in here. I love to see that because I know we're fixing to get a major move. Okay? What changes the color? Sorry, I had a cough there. What changes the color on the trend ATR crosses to yellow? When it gets within X amount of ticks of the ATR. Is that how I tell? No, when I see that pattern, the biggest thing that you see is a row of congestion dots that cannot be violated yet. Okay, and what it is, they have to gather the momentum. They have to gather the power to break through that area because it's a very strong area. But when it does, it's all she wrote. Well, I keep telling people if they would just pay attention to the higher time frame magenta peaks, they would make a fortune. But what do I know? How do you know the 724 would be the good one? You had diverging volume. There's actually a lot of concepts in within that. Okay. Um, Trying to implement this on the live edge of the market is going to be very difficult, but I'm going to go through it real quick. You had a major move to the downside, ultra high volume, okay? They come back to test that, and it is on diverging volume. What happens? The market goes up, but Wyckoff says it will come back and it will test that line. When it comes back to test that line that was made by the low, it will form on diverging volume, which is exactly what happened. Once it forms on diverging volume, do you see this ATR level here? Okay. It will go up to these congestion dots and it will come back to test that same area. That is what you see here. If that's done on the verging volume, you can expect an upward movement, which is exactly what happened. If you extend this line out further, you see that it coincides with this ATR. In other words, they are walking up the ATR levels. Okay? Now, to understand that and implement that on the live edge of the market, very, very hard to do. But if you look at the color codes that are within my indicators, it goes from red to blue, cannot break the ATR because it's not enough buying volume in there to do so. And if you know that it should come back and test that low, you would not have been entering here. You would have been waiting. Again, they flip it over here. Okay. I can already tell you they were doing it on increasing volume. Does that mean it will not bounce down? No, it does not mean that. But it does mean that they're going to come back and look for an ATR that will support price to go up. And that is what happened here. You see the yellow plus signs? You were getting alerts in the scanner window when this occurred. Why do I know that? Because these are yellow. You also got alerts here, so if you were not sitting at the computer, you would come back and look at it and say, oh, I need to go look at my computer because I'm at an ATR again. Does that answer your question? There's actually a lot of concepts built into these indicators. I don't bother to try to teach them because they're very complicated. Well, you do. And if you would learn to just wait, you're not going to trade every day. And I've said that to everybody before. Trade on the best days. What are the best days? Either trending market or when we're having magenta peaks. Okay? Let the trade set up. All right. Any questions on that? All right. I was doing the British pound. Let's go look at the euro. I haven't done the euro yet. And y'all had to bear with me because I will forget where I'm at. Remember, I can't even remember how to water the dog at the moment. All right. Now, here's the euro. Okay. Yeah, let's get back to here. I got to get my little pointer here. Okay. Is this the same pattern that I just talked about? No. Where's your substantial move here? There wasn't one. There was in hindsight, but and that's to the left of the screen. Right here, do you see that same pattern? No, you haven't had a substantial move. The move was during the Swiss bank announcement. You would have to know the euro to know that. Okay? But do you see how this level of congestion dots formed here? Okay, you already had a double area there. Do you see how the sellers actually stepped in on that bar right there? I mean, the buyers actually stepped in on that bar right there. Now, it did miss this by, let's see, I would say about 37 ticks. But could you not have made money on, I don't know, 320 to 520? Could you not have taken a profit on that? Do you see how there was nothing but black space? That's a sweet spot. I don't care if it gets all the way to the top. Okay? That's the reason it's a sweet spot. Do y'all understand that? And in honesty, if you want to see a sweet spot, it's probably here to here right now. You're over analyzing them then. I don't need to zoom them. If I have to zoom in, it's probably not enough to even create an entry for me. See if I can get it to zoom in. Oop, maybe too much. Oh, yeah. Well, they were actually the congestion dots were back here before that big announcement ever came out. This was the big announcement. Okay, this was the euro prior to that. Okay, and do you see how it was blue, red, blue, red? You had a lot of congestion in these areas. Do y'all see that? I mean, I don't think I need to zoom that. I think you should be able to see there was 15, no, 1577 up to 1644. Okay, that's less than 100 points. And it did that for, I don't know, about a week before the SNB announcement. And the SNB announcement came the day after they announced the court decision that was going to allow the ECB to do the bond program. Okay? Is everybody with me so far? Do you see how you had this big congestion area there? Somebody knew something was going to happen. Okay? That's all I'm saying. Somebody had to have known. You wouldn't have that congestion area there. Of course, the bank knew. The bank knew the moment that that decision was going to be announced that they were going to unpeg the euro and the Swiss franc. Now, is that something you can prove? I don't think anybody can prove it, but how can anyone prove anything unless they're sitting in all the traders' offices? But can you see it through the volume? You can. That's what I look at. You know, I used to trade double tops and double bottoms. Okay, here's your double bottom right here. What happens on the virgin volume? Okay, that's what sets a double top or a double bottom apart. The other thing is whether it's at an area of support or resistance. Yeah, that's exactly what they did. They adopted quantitative easing. Okay, it's like the Aussie the other night. They had their cash rate announcement, and they cut it 0.25%. Okay, that was kind of like earth shattering. I mean, the Aussie ripped to the downside. I believe it was to the downside. Can't even remember now. It went down, then up, and then back down, if I'm not mistaken. That's right. And when I'm trading, I don't sit and think about what the big boys are doing. I just read the volume because I don't trade very good when I'm thinking about conspiracies. That's why I don't do it. It doesn't mean that they're not there, though. All right. And let me delete that off. This one here is the Wyckoff Spring. Yeah, it is. And most, actually, if you start tracking them, most of the double bottoms, double tops that you want to trade are the ones that were based off of Wyckoff. The problem is you get so into the requirements of a Wyckoff spring or a Wyckoff upthrust that you forget you need to trade, and you're always on the left side of the market, which makes it hard to trade the right side of the market. All right. I'm going to end today's session. I said we're only going to do an hour, and I think I went over most of the currency futures. So, any questions this morning? Now, tomorrow we're also just going to have an hour session. In fact, it's the only hour that I'm actively looking at the markets this week. So, y'all get me fresh. Such a trip. All right. If nobody has any other questions, I'm going to stop the recording. I actually